made the mistake of telling Stephen Jackson last year that it was the next big thing. Of course, he'll never let me hear it end up. So.
Oh, I can keep. Oh, okay. If it's gonna hold us up, I'll take off the glasses. I'm not committed to the glasses.
You don't have the glasses for the one. Keep on.
Okay, 'cause I don't want to start. Well, I don't see the teleprompter. No. Okay, but this says yes. Okay, I'm fine. I can see.
Alright, now stand back. In 5 seconds. Get them on. Alright. 5, 4, 3, 2.
We are honored to have Yohan Heaven, CFA, Group Deputy CEO, CFO at Proven, and by February of next year, the appointed CEO of the group. Welcome.
Thank you very much, Dennise.
All right, great. So we've heard that you stated that you're going to double the profits of Proven when you become CEO. You want to give us a little, behind the scenes and the plan for that?
Sure. Well, you have to conceptualize that. So that's really a 2 to 3 year plan for Proven.
Okay.
So if you look at Proven over the last couple of years, we made 3 big acquisitions right before COVID. Roberts Manufacturing, Proven Bank in Cayman, and Heritage International. And then we moved into COVID, moved into lockdown. Right after that, the central banks over the world pumped billions of dollars into the economy, led to hyperinflation, and then higher interest rates, which kind of slowed down the economies. We're finally moving out of that, scenario. So interest rates are coming down, and right now, based on where Proven is, we are poised for growth.
Okay.
Banking and wealth does well in a low interest rate environment.
Okay.
Our growth and our funding is cheaper in a low interest rate environment. So just the context of where the global economies are right now put us in a good position to double our profits in another 2 to 3 years. Our target is 15% return on equity, which is about 15 to 20 million, depending on where equity level US at any point in time.
So you're saying in 2 to 3 years you're going to make US $20 million.
That is the target.
That's the target.
That's
okay,
the target.
And that's because interest rates have gone down.
And that's because the environment is a lot more inducive to growth and a lot more inducive to the financial services sector, which we're mostly in, and of course our real estate portfolio.
Okay, because when interest rates are lower, people buy more real estate.
More real estate, exactly.
All right, well, thank you, Yohan.
You're welcome.
All right. All right, Nasburn, that was the first clip. We're going to move to the second clip.
What's this one?
The AI. The AI. So it says, given the rapid pace of AI in the financial sector in the US, what one trend are you seeing in Jamaica?
Okay.
Yeah? Are you going to fire all of your traders and give it to the AI?
All right.
All right. Ready?
No.
Oh, yeah.
Alright. In 5, 4, 3, 2.
Hi, my name is Dennise Williams, and we are joined by Yohan Heaven, soon to be CEO of Proven Investments. Welcome.
Thank you,
Proven
Dennise.
Group, the group, right?
Right. Proven
Absolutely.
Management.
Okay. So you guys are well known for being in the manufacturing industry, banking and wealth management, real estate, and you're an international company. So you may have a little familiarity with the pace of AI in the financial sector. But for here in Jamaica, what one trend are you predicting for AI in the financial sector?
Well, as you said, AI is the future, and we're seeing many trends right across many sectors. The main trend that I would say that in the financial sector is from a customer service standpoint.
So it's all bots?
So all bots, handling your general customer service issues, and then moving to the next level, actually giving advice to our clients and to the toward investors out there.
But what about jobs?
So-
I mean, should persons in the financial sector be worried that they're going to be replaced by AI?
Yeah, no, AI will augment and will support the persons that are there, but I don't see them being replaced.
Okay.
Persons still want that personal touch.
Yes.
They still want the advisor. They want somebody they can call on. So I still see, that personal side as an important part of the financial services sector, but it will now be supported by higher intelligence in terms of being able to give advice on your portfolio and where, the future and, various options that are available within the investment life.
So you think, are you comfortable in saying the next 5 years when I call Proven, I'll still get a human?
I'm most definitely.
Yes, okay.
You may get a bot first.
Okay.
But eventually you'll get a human.
I'll still get a human. All right. Thank you very much. That was Yohan Heaven, soon to be in February of 2025, CEO of Proven Group. All right.
Thank you.
All right. Nasburn, that was number 2. We're going to number 3.
What's number 3 now?
Is the outlook for the stock market for the last few months of this year and then next year.
Okay.
Ready, Mama? Oh. Alright, ready in 5, 4, 3, 2.
My name is Dennise Williams. I'm here at the Business Report with the current Deputy CEO of Proven Group and who will become the CEO of the group in February of 2025. So we're asking him to put on your hat of prediction.
Right.
Yeah? And so what's your outlook for the stock market for the next few months, the last few months of 2024, and then your outlook for 2025? So essentially, where should I bet my house money on? Or should I?
Or should you?
You're right.
So the stock market over the last 2 years has seen a decline.
Okay.
Right? Interest rates have gone up and persons have moved from equities into fixed income just because you can earn a decent return on your fixed income instruments. Over the past couple months, we've seen a significant decline in interest rates, especially here in Jamaica. If you look at it, Bank of Jamaica have moved their base rate from 6.5% to 6%, only 50 basis points. But their 30-day rate has moved from 10% to the last auction was 6.85%.
That's big.
So you're talking a massive over 300 basis points, 400 basis points fall, 300 basis points fall in interest rates. So persons that were comfortably earning 10% in June and July of this year on 30-day paper are now earning 6%. Those persons are going to want better returns. The pension funds, the institutional investors are going to now look for other opportunities. The stock market has been down. The valuations have been good, and I see that the stock market is in a position right now to benefit from a lower interest rate environment. I don't expect it to happen for the rest of this calendar year, but definitely going into next year, the stock market, in my opinion, is the place to be.
And you look at other stocks other than Proven, right?
Of course, for the whole market. When you look at the market and the valuations in the market, the valuations are way lower than they were in 2, 3, 4 years ago.
Right.
When
and so for the layman, you're saying the valuations mean what? What does that mean?
Meaning the price of the stock relative to their earnings.
So the companies are earning money. They're doing well.
They're doing
well. But the stock price is lower.
Correct.
Than it should be because of what they're earning.
Exactly.
So this is an opportunity.
This is a huge opportunity. Get in now at the bottom, in my opinion, and ride it out.
Okay.
Going into next year.
Okay. So fantastic.
Yes.
All right. Thank you so much. Yohan Heaven, Deputy CEO of Proven Group. All right, Nasburn, that's our 3 clips for news. So now we're going to do the financially focused long form. All right, give me 1 second. No, I'm not going to change. Ask Marlon if I can wear my glasses to differentiate, though, since I'm not going to change. You heard me? So can I wear my glasses? No differentiation. Differentiation is I had on glasses, I don't have on glasses. It's differentiation. Okay. What? What did you say? Oh. No, seriously, Claude? Really? That don't make a difference? No? Meh? Alright, so. Fine. I'll give you more work. Okay, alright. Okay, fine. Okay. So this is 25 minutes.
Alright.
Yeah, so we should be able to
You
go.
want to go? You ready? You ready? You ready?
Oh, and for this one, hold on quickly. I did ask a question at the end, which was the, you know, although AI is coming, as you said, but in terms of like really incentivize, and I don't mean really like bribing or anything like that, but like, you know, to kind of, a lot of times people are intimidated to talk to financial professionals, and so they may not get the best advice. Oh, okay, so it's just how to incentivize them, but I don't mean bribe. Like, no, I'm saying like a financial person, how do you get him to just be not an order taker?
Oh, okay.
5, 4, 3, 2.
Welcome, my name is Dennise Williams, and on Financially Focused, our goal is to bring experts on air to help you create a clear, concise, and holistic financial plan that aligns with your intentions and the actions you are willing to take. So how do you know if an investment is right for you? Well, only you know your level of passion, your skills, knowledge you bring to the table to act or not to act on an investment. So in that regard, there's no one size fit all, and investing is really personal. But we all need a little guidance, and so today we have a real treat for you. Managing a team of experts and a portfolio of real estate, stock market, manufacturing, distribution, financial services, and advisory investments in the United States, Canada, the Caribbean, worth approximately $12.8 billion in market capitalization. We're just absolutely honored to have Yohan Heaven, CFA, Group Deputy CEO and CFO of Proven, and by February next year, he'll be the group CEO. So you'll be in charge. You're not in charge yet, right, but you'll be in charge February.
Yeah, man. Thanks so much for having me.
Yeah, okay. Or are you really in charge right now?
No.
Okay, all right. So we just want to talk about all things investing and, help our viewers who are they're retail. A lot of our viewers are retail customers, retail investors, and we want to help them kind of think about how to get a customized plan of action.
Sure.
Okay. So you can scroll up, sweetie. All right. So we want to talk first about determining a good investment. Mm-hmm. And how we're going to do that is, you've been in this game for over 20 years. And so we want to know what your investing philosophy is. Not Proven.
Right.
You're not the brand for this minute.
Sure.
It's just you, Yohan.
Right.
So what would you say to your kids? What would you say to a cousin? What's your philosophy?
So my first philosophy is to invest in what I know.
Okay.
What I'm familiar with. So I look for companies that I see that are doing well. So for instance, you go to the supermarket and you notice that everybody in the supermarket has Grace products, for instance, in their trolleys, or have Lasco products in their trolleys. That's my first sign of a good company. So I go out and I look around and see what are the trends, what I believe to be good companies out there. So once I've identified that this company is a good company, it's a listed company, I then determine and look at the industry that it's within. So you look at, manufacturing, financial services, whatever it may be, and determine where that industry is right now. Is it poised for growth? Is it challenged? Where do I see that industry going?
So it's possible that someone has a product. So because we can do this in any market. So let's pick on an old, I'm dating myself, but Blockbuster. Remember that?
Right.
Video rental?
Sure. Yeah, man.
Yeah, and then YouTube came and blew them out of the market.
Right.
So if you were an investor in Blockbuster, but the industry is entertainment, right?
Yep.
How would you have known before YouTube came on the scene that you maybe needed to shift out of investing in Blockbuster for video rental?
So the first thing I say, so you look at the industry, entertainment is bubbling, entertainment is good, that's your first sign. So you check that box.
Yes.
Industry is good, you love it. The next box is you go down to the next level. So you look at Blockbuster itself.
Versus YouTube.
Right. And it was really Netflix that killed them out.
Yeah.
So then you look at the competitors in the market.
Right.
And you look at the competitive environment, you look at the trends, you look at what's happening in the market. And at that point, you would have realized, look, there's this new competitor, this new boy on the block. Subscribers are growing, revenues are growing. It's a definite warning sign that something is about to happen. Then you look at Blockbuster's results. You see revenues declining. You notice they're closing down this location, they're closing down that location. The first signs that things are slowing down. And then you use those as indicators to determine, is this company a growth company? Are they a mature company? And at that point, as an analyst, what we do is our projections.
Okay.
So we look at the next 5 years, look at the overall industry, look at the company, where we see revenues going, look at their expenses and how they can cut their expenses. Because, Blockbuster could have survived if it had closed down all of its locations and just moved straight online and competed directly with Netflix.
Okay.
Would have cut its operating costs and would have changed its model. So just because you saw the declining trend in the revenue doesn't necessarily mean that it's going to go bust and it's a bad investment.
Okay.
But what's important as an investor is that you're an actual owner in the company. So you have to go to the annual general meetings, to the investor briefings, hear what the CEO is saying. The CEO at the time, he was adamant that Netflix was just a fad and it was going to fall, and so that wasn't the case. So again, you then make your determination based on what they say at the AGM, their posture, how they see things going, and then you do your evaluation as an investor to say whether it's a good buy or it's a bad buy.
All right, let me give you one closer to home. So again, going into the past, because this public record, Carib Cement had a bit of a hiccup, right? A couple buildings crumbled, right?
Sure.
As Yohan, not as one of the leaders of Proven, but as Yohan, how would you looked at, the industry would be real estate or construction. So you would have looked at that industry, and then you would have gotten all of this bad news about Carib Cement.
Right.
How would you know Carib Cement would still be standing and stronger than ever today as an investor?
So Carib Cement is a simple one. So Carib Cement is a monopoly. So there's really no other option in the local market for cement. So and it's a heavily regulated market as well. So at the end of the day, Carib Cement is going to survive. Maybe under different ownership, maybe but it will survive something as that.
So that matters to you for your investment philosophy. Is this guy the only guy in town?
Right.
Then that influences how you invest.
Yes.
As opposed
definitely.
to somebody who has a lot of competition.
Correct.
Okay.
Yes.
All right.
And that's just one factor.
One factor, but you look at many things.
Many
okay,
things.
give me like 2 or 3 that else besides.
So, obviously competition, You look at the company, how much debt it has, for instance.
Okay.
That's a major thing. So if the company is heavily indebted and they're unable to make their payments, then it's not a company that you necessarily want to invest in. You look at the management of the company. How competent are the managers? That is one of the key factors that we use in determining where to invest. And also, the board of directors, who is running the company,
Right.
and their experience.
Right. Okay. So we started with looking at what's in your supermarket trolley or in the other people's supermarket trolley, but you don't really want to watch other people's, but still, it's a thing. Yeah. And then what's popular,
Correct.
right? And then you said we could look at the industry. So food would be the supermarket, but then there's construction, real estate, just entertainment, many industries.
Right.
So you're looking at how healthy the industry is. And then you're saying, look at if the company has debt,
Right.
if the managers and the board of directors maybe have integrity. That's
Right.
something you're looking at.
Most definitely.
The competition. Anything else?
Yeah, I mean that is it. I mean, it's really all about the top-down industry, the company, the financials, and how well the company is doing.
Has COVID changed anything about your personal investment philosophy?
No,
No. So still
still the same.
fundamentals.
Yes, most
Okay,
definitely.
great. Okay. So now let's look at another thing that a lot of retail investors, and I use the word retail investors as opposed to the big guys, the institutional investor.
Right.
Okay. So what do you say to someone who is house rich? They put everything in getting their house, clearing off the mortgage. This is fantastic. But they don't want to sell the house, but they don't have any cash. So things have gotten tight. So inflation may have carried up the value of the house, but also the value of things in the supermarket, right? How do you handle a situation like that? Because you're illiquid.
Right, yeah. No, it's a tough decision, and a lot of that decision is driven by emotions, and the house being your own, something that you're built up from scratch. So at the end of the day, however, we all have to live. So a tough decision has to be made. There are various options that are available, some less so in the Caribbean as opposed to in the States, but you could get a reverse mortgage.
Right.
So that's always an option where you sell the house, receive a lump sum, or you receive a monthly income until you pass. So that is always an option that is available, less so, as I say, in Jamaica. But for me, I believe it's important that tough decision has to be made, because having an illiquid asset over cash flow at that stage of somebody's life is not ideal. So, having...
You mean let go of the house?
You're going to have to let go of the house.
Tough.
Yeah, man. So, you have the cash flow and thing is important.
Do you think in terms, again, we're just looking at your investment philosophy. Would you say cash flow is number one for you?
100%.
Okay.
Yeah, man.
So what does that mean?
And again, it depends on the stage of life, and it depends on what are your needs. So when you're younger, cash flow is less important because you're in a job and you're earning, and so you're investing for the future. So you're investing more for the cap gains and the growth of the overall portfolio. You don't need the monthly cash. But as you get older, reach retirement, cash flow becomes more important for you.
Okay.
And being able, you're retired, you don't have that salary, the income coming in, so your investments have to be able to provide you with the cash that you need to live.
Okay, so cash flow is number one.
So
when you're younger, you're saying as an investor, your investment philosophy was to have the asset grow in value.
Correct. Yes.
Okay, so between first job and 65, you're looking for assets that grow in value.
Exactly.
And then after 65, you're saying make a tough decision. It hurts.
Yeah.
Hurts.
So and you do invest in illiquid assets in your 20s, 30s, 40s, and also your 50s. But at some point in time, if they're not generating enough cash for you, the best decision is to move into more cash flow generating
Okay.
assets.
So then you would say to somebody in their working stage to be more diligent about finding those assets that will grow.
Correct.
So maybe not the flashiest car,
Right.
because that doesn't grow.
Adding value, that's a depreciating asset.
And lots of vacations.
Right.
And,
Exactly.
right? So, but it is basically looking for assets and speaking with a professional, of course, a licensed professional,
Right.
right? To find those assets that grow in value. Okay, so that's the goal.
That's the goal. Yeah.
All right. Okay, so another thing that we are recognizing, it's been said that, was it in the last 50 years, there has been more technological changes than in the last 500 years. Yeah, you've
Sure.
heard something like that,
Yeah,
right?
most definitely.
Okay, so we're calling that velocity.
Right.
So in your career, where have you seen things change fast, but people positioned correctly make money? So that's part A of the question.
Right.
And then part B, today, right now, what would you say to someone who's looking to 10 times their money?
Sure.
People want that, you know? And don't say play the lotto. That doesn't count.
Yeah. Oh Lord, that's what I'm gonna say. Yeah. So the trends are there. As you said, the technology has transformed the world over the last 20 years, and there are various trends that are now trending and will be the future. So digital money, for one. Artificial intelligence has been a buzz over the last 2 years, and those are the trends, and the speed at which those things are moving are really those areas of that you can see massive growth in the
Right.
next couple
I
of
mean,
years.
if I had put $1,000 in Bitcoin 10
Right.
years ago, I mean, oh my gosh, we'd be having this interview on my yacht,
Right,
right?
sure.
Yeah. But I missed out.
Right.
So, in your view, where's velocity now? Where are investors? And I'm not going to say it's like the most realistic thing to look for 10 times your money quickly. So,
No.
I'm not saying that.
Right.
But I am saying velocity is our reality. Things are moving.
Sure.
So where are you seeing that for investors?
So let me first start off by saying that wherever there's velocity, there is risk.
Okay, so it's high risk.
High risk.
So I could have been wiped out.
If you're gonna get 10 times your money,
I could have wiped out.
yeah, man. So 10 times the return, 10 times the risk.
Okay.
So let us just put that out there. So if
Okay.
you're not willing to take the risk and lose everything, don't take the risk, right? So from a risk standpoint and the opportunities that are there are, as I said, these emerging trends and markets. You said Bitcoin, and then there are other cryptocurrencies that are out there that come, with that potential, but also the risk of losing your money, because nobody really knows where cryptocurrency and that market will end up. AI, in my opinion, is more of a positive trend that is going to grow, and is going to grow exponentially, and is going to have huge opportunities. The key is to choose the right companies and the right persons to invest in.
So we're back to what you're saying at the beginning.
Right.
So we're going to pick on AI.
Yep.
And you're saying I come to your company
Right.
and I say, listen, it's my life savings and I want to put it in AI.
Right.
What I must do? And it's literally the same thing. Look at the competitors.
Right.
Look at the management.
Correct.
If the AI company has debt.
Right. Look at their technology. Look at their differentiator, how they differentiate themselves. You say you bring in your life savings. I would say take 10% of your life savings, put in this, put the 90%, depending on your age and stage of life, obviously. But don't bet everything on one thing. But no, there are opportunities out there. You look at companies like Microsoft, heavy in AI, a very well-established company already. NVIDIA, that has grown like 3 times over the last couple of years. there are opportunities out there in AI, and there's some that may go bust. So again, it is to get the advice of an advisor on how
But
to navigate it.
I can stay locally and invest in these type of companies.
Sure.
I can.
Yeah, man.
Very good. All right. Now, let's go back. We kind of touched on the lotto a little bit, but a lot of people think they're investing, but they're really gambling. How do you know the difference?
How do you know the difference?
Yeah.
The difference is if you are investing in something tangible.
Oh, meaning?
So investing in something that you can touch and feel, investing in a good idea, investing in something that you believe in.
Right.
Rather than just throwing money at
You mean like
the
putting it
next-
on a bot that's going to trade for me and hope for the best?
That may be a wonderful idea if the bot is programmed properly,
Ah.
has a proven track record,
Okay.
does very well, but
Right.
that could
But
be
if you
the way
don't know
it is.
the programming of the bot, and
No.
you don't know the track record,
Well, no,
that's gambling.
That's gambling. Yeah.
Right.
But if they've been able to display that over the past 5 years, the bot has beaten the market 90% of the time. Again, everything is a risk. Everything is probabilities. If you believe that is a good risk for you, then.
Well, the reason I throw that in is because you said if it's something you can touch, and for most people that's just real estate. I can only touch real estate.
Right.
I can't touch the stock market.
No, but you're investing in an idea.
Oh. Okay.
So you're investing in something that somebody has been able to display to you that is a good idea and will make money.
Okay. All right. Okay. All right. Scroll up, sweetie. Okay. So Warren Buffett has said, the main risk in investing is not knowing what you're doing.
Right.
And a lot of us don't know what we're doing. We just say, I saw Yohan and him said, boy, I buy the black chair and I bought 10.
Right.
I know I lost everything. So, how do we protect ourselves from that?
Again, you have to invest in what you know. I mean, my daughter came to me recently and she's like, Daddy, I want to invest in the stock market. So I said, sure. What companies do you know about? No, I just want to invest in the stock market. I just want to invest in.
No, but that is yours.
Yes.
Yeah,
So I'm
you
like,
do it.
No, I'm not.
You do
No,
it.
I'm not going to tell you what to invest in. You, based on what you use and what your friends use, what do you see as a good trend at your age? And she's like, well, I see my brother, he's always on Roblox and all of his friends are on Roblox and, they play these games. And so I said, yeah, so let's look at that as an investment. There's a listed company in the States and it's a video game and it has some millions of subscribers, it's doing well. Again, we have to look at the financials and everything, but it all starts, as Warren Buffett said, with something that you know and you're familiar with, something that you can see that is out there. It's not just somebody telling you something.
Yeah. It's not you do it because you're my dad.
No, it's about you also believing in, because you're owner of that company.
Right.
So it's like you starting your own company. You actually own a piece of this company and you have rights as an owner to go and talk to management and tell them they're doing foolishness.
Right.
So you have to be able to as an investor, understand, yes, so this is my company. What are you doing? How are you going to make money? How are you going to cut expenses? How are you going to bring value to me at the end of the day? So that is the first part of it. And then the second part of it now is, even though it's a good company, it may be a bad investment. Because a company may be doing well, but the stock is trading at $100 where it's really worth $10. So again, you have to look at what is it valued and what is it trading at. And that's what we use, our valuation techniques. We use like our PE ratio, price earnings ratio, which is showing your price relative to how much the company earns. And we use that as a gauge of value, because it's very important that you don't overspend, even if it's a good company.
Okay.
Right?
Right. So it's like buying shoes. Wait till it's on sale.
Correct. No, it's true. No, it's a good point.
Yeah. Okay.
Right.
All right. Scroll up, sweetie. All right. Okay. Keep going. Scroll up. Scroll up. Okay, so we want to just, close this discussion. Really, two critical things I think is missing at the retail level in terms of how retail investors approach investing. And the first one is creating a plan of action for investing, if you could give a couple tips on that. And the second thing is building a relationship with a financial advisor. So it's not just, buy this, sell that. It's actually a relationship. Right. What are your views on those 2 points?
Right. So both points are very critical. First is to look at your goals as an investor. Your time horizon, are you investing towards a specific goal? Is it to buy a house? Is it for vacation? Is it for retirement? You look at specific goals and your time horizons. That gives your advisor a good guide as to what to invest in. Additionally, the second goal is, are you looking for income? Do you need a monthly amount every month coming from your investment? Are you willing to stay and put it away for 10 years and don't touch it, and you're good? So that gives your advisor a good base on where to start. And then secondly, we look at your risk tolerance. So are you somebody that
can't sleep at night?
Exactly, knowing that you may lose 10% or you may lose 20%, or are you just very conservative and prefer to stay in a fixed income and earn 5-10% per year? So your risk profile, your investment horizon are critical, and then those two are used to put together and devise a portfolio for you. The portfolio needs to be reviewed every year, annually, because your circumstances change every year, and that is how we'll
so
go
that's
about.
The blueprint.
That's the blueprint.
Well, what about the relationship
with the advisor?
Yeah, like how do you build a relationship?
So you build a relationship by obviously opening an account first, and normally you get appointed an advisor, and then you
should you call them twice a week to just chit chat?
No.
I'm trying to say, how do you build a relationship?
Right. So it's critical for all of us to become educated ourselves, and for us to become financially literate. So we have to understand our own portfolios. It is very critical. We can't just take the advice of any advisor either. We have to understand what we're invested in, understand what it is that they have given us, and ensure that we are comfortable. And 2-3 years in, we should be telling the advisor, I want this, I want that.
So it's not, you're not saying we should become dependent on the advisor.
No, I'm saying we all need to become financially
so it's not
literate.
a relationship where I expect you to call me and check in. Dennise, all right?
No, not in this environment, not where your advisor changes on an ongoing basis.
So I have to be responsible.
You have to be responsible.
Oh, you're giving me work for my money.
Yes, it's your money.
Yes.
It's your retirement. When it all goes, you lose it, or it has to be, it's your responsibility.
Okay.
As an investor. And so that is, it's key that we stay on top of what's happening in the industry, what's happening with our companies, what's happening with our portfolio, and I monitor it daily, if not weekly, monthly.
Okay, all right. Okay, scroll up and now close. All right. Yeah? All right. So, Yohan, this was very fruitful, but it really boils around understanding the fundamentals. Literally every question you give me back the fundamentals, which is understand the industry, understand the competitors, understand the managers of these companies, because it's your money.
It's your money.
Right? Okay, well, thank you so much for joining us.
Thank you for having me.
Right. So there you have it. Realistically, you are the only one who can determine what you want to get out of the financial realm of your life, as well as know the actions to take to increase or decrease your level of satisfaction in the other areas of your life. So, take time to figure out what you want for your ideal life, because it changes. Yohan says you look at your financial plan literally every year to see if things are going your way. And this is what's going to help you design your investment plan to fit in your life. So my name is Dennise Williams, your host. We're blessed to have Yohan Heaven of Proven with us, and we look forward to seeing you again.
Thank you so much.
All right. Yay. That's it. We're done. Yay! Okay. See, we're on time.
I know. That was bad.
Yeah. All right. Okay. Claudia, unclipping. Oh, yeah.